Hey, good morning, everybody. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Good morning, Jim. How you doing, buddy? Hey, you know what? I'm grumpy today. I don't feel well, or I feel run down. I'm overworked and overstressed and not enough time. And so I'm I feel all crybaby today. So I apologize for that up front, everybody. I will do my best. We'll just go through this. I think no songs, no dances, no no deep, insightful, fundamental analysis. I think today let's just bust through the charts so I can go back to feeling sorry for myself. but anyways, good morning. My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Really nice to see you. I know technical analysis and some other things, but today we'll just focus on technicals. We'll go through dollar pairs, yen pairs, gold and oil, zippity dip dip dip. Jim says sounds like FX trader. Yeah, Ron. Wah. Well, at least I'm man enough to admit I'm a big baby. So anyways, I really hope these sessions are helping and making a big difference. I know some of you guys for more than 10 years. Isn't that amazing? More than 10 years. So you're like family, and I want you to succeed. I mean, that's the whole point of doing this on a personal level, but even on a professional level. Traders Way would like clients that succeed and thrive and trade profitably for years and 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 years. It's just a fantastic business model. So if you are benefiting from these webinars, then please visit tradersway.com and open up an account today. Also, since we're here at the Forex.Today YouTube channel, would you be so kind as to click the little subscribe button down here? And then when I start, I was a couple minutes late today, but when I hit start, you're invited right in. It just makes your life so much easier. I also appreciate the likes and the comments. So if you could do all of that, that would be wonderful. Can't be chippy every day. Yeah, well, some people are. You can't trust people like that, right? Big help, keep you motivated. Cool. You know, and you know, in that sense, it's symbiotic, isn't it? Because you know, on a day like this, I could have just stayed in bed. I'm telling you, I got up. I didn't even meditate in the shower this morning. I took 2 rock stars into the shower. I drank half of one. And I'm like, I don't even want this rock star. And I didn't even really eat breakfast. I'm like, I don't want to eat breakfast. But you know, you give me the strength to get out of bed and do what needs to get done. So anyways, thank you to you. All right, so let's start in the middle here first. As you know, we're waiting for oil to go up, and when oil goes up, this will probably go down. We identified quite a while ago, right? Quite a while ago that we're in an upward move. We have a channel here, which means there's an uptrend going on, bottom, top, bottom, top, bottom, top. And we were here on Monday, so what is it now today? Wednesday. Well, on Monday, we said if you were a bull, there was only one viable trade plan. I don't know if we had even touched that yet, but anyways, there was only one viable trade plan as a bull. This is it. This is the support, the bottom of the trend, and all this kind of stuff. And that should go up. Now, I haven't touched this line since we drew it. And look where we are now, and look where it stopped. Kind of funky. Now, if you're a bear, there was plan A and plan B. And you can see none of them even gave you a glimmer of an opportunity. So you either bought it or you didn't sell it. And that's kind of what we were talking about at that time, and then even yesterday. Having a bias and trading your bias, and it protects you, right? You see, you never had an entry, never had an entry. I mean, maybe you had an entry on the second one. Maybe. Okay, yeah, maybe. maybe. Yeah, in here, yeah. So if you took one in here, maybe even one in there, it's okay. It's okay. Okay, but you can see bulls. Bulls did well. And what did we talk about yesterday? We talked yesterday about the fact that it's not that you're good or bad as a trader. The difference between success and failure when you're trading properly is just whether the market conditions favor your bias. So if you're a bear, yeah, maybe you had one trade. You could have even made a little bit of money, but you probably did. But you didn't. There was no bloodbath, right? But here's the old resistance, and then it became support. So you can see on smaller time frames, like we're on a 15-minute chart, but anyways, right? You can see. You know what? I should be doing my. Let's see if this works a little better today. All right, it's a little too much, but anyways, that. Right? This is kind of what's going on, isn't it? Now, I don't remember why I picked this as a top, but it's interesting that we're collapsing on a double top. So what would a bear do here? I think a bear is going to want, you know, it's proof of action first. How do we turn this off? There, cool. Yeah, I'm going to turn a couple of things off. Don't need that. Don't need that. Cool, that's going to work better. All right. It's nice to have those arrows, isn't it? Oh, I'm looking at this. That's what's got my eye. Right, it's this area here. That's why I drew that. All right, that makes sense. Oh, and it's also December. See, in December, if I want oil to go up, in December, I'm thinking this. Okay. So that's what's going on there. So we got a lot going on today. Don't we have a Bank of England announcement or report being released about, what, 10:30 today? And then we have ECB people talking. And then we have the Fed announcement and report. All within like a 90-minute period. That's a lot of central banking. So be careful between, let's say, 10:30 and 12:30 New York time. I'm not sure, how do I analyze my fundamentals? I'm not sure what you mean. Yeah, that's what I mean, Ian. And it's all happening kind of the right time, or at the kind of the same time. So anyway, so if that's going to fall, we need oil to go up. We're still not there, but remember what we talked about yesterday, that there's a slim glimmer of hope that, you know, this starts to happen at some point. But probably what? Maybe if the G20 meeting this weekend goes well. But right now, that doesn't seem like a good idea. What seems like a good idea? Okay, drop. This takes a long time. Let's see. Hold support becomes resistance. So you sell in that yellow zone. Drop. Hold support becomes resistance. That's your new sell zone. Drop. Hold support becomes resistance. Drop. Hold support becomes resistance. drop. Now, I don't know how you want to measure all these other ones, but you see how they're all pullbacks to the 21? Just over and over and over. It's the same idea. Old support becomes resistance. Or, you know, the old school way is just sell at the 21, right? So on and so forth. But you could see, like where we are now, when you get the low, when you're down here, you're supposed to look left, find the old support, drag it across, and it should be your new resistance, right? And so to answer my question from earlier, this is probably the smarter thing at the moment. Another thing to watch is what happens if price rises up into here. Well, that's the first time in almost 2 months, right? That would be probably an important technical change, right? The downward move would be slowing down. Not bullish, but slowing down. Okay. Here's our trade plan from, what was it, Monday? Sell here or sell here. Remember that? Plan A, plan B. Plan A, plan B. And then we said, if you happen to be a bull and you thought it was going up anyways, maybe you buy it here and it goes up to here, in which case then plan B is initiated on a bear. So bears either way are going to sell it this week, right? Even if bulls take over in the beginning, bears are still going to sell it, and of course plan A has won. The target for plan A, just in case you've forgotten technical analysis, this area here is the target if you sold this area here. That's straight out of the swing trading course. Right? What do you think? Any questions? What would a bull do here? Hey? Maybe? Well, it's like one of these things. This is even more interesting. But if you're going to be a bull, you want to keep it above this area. So this is what a bull would be thinking and planning. We don't know if it's going to work. Okay? We don't know if that's going to work. But if you were a bull, you've been waiting for almost a week and a half to buy. Now you're interested. Now you're sitting up in your chair and you got this going on and this area here and this area here. Okay? And you want to take it up here. Cool. It's just the beginning of a trade plan, that's all. But you would be sitting up in your chair, get ready. How much time does it take swing trade? Well, what people do is they take the swing trading course, which is, I don't know, 25 hours of videos. And then you join the swing trading group. And the swing trading group is a group of people that have completed the swing trading course, so they know how to swing trade. And then we meet to set up trades before they happen on a weekly and monthly basis. Hey, Ming. I need to be in Singapore so much. Singapore's so nice. I like hanging out with my friend Daniel. Is it fully closed? A year ago, it was half closed. Yeah, come to Singapore. Yeah, I just don't have time down here. I totally want to. I might squeeze a trip into the Caribbean to do some business. But, you know, with Christmas, it's difficult, but maybe in January. Because it's totally closed now, huh? That's good. I hope they don't ruin it. All right. So what were we talking about here? We were talking about, let's break this down. This is Monday, so now we're on Wednesday. So on Monday, we were here. And I said, somebody, you know what, let's change the color on this. It's just not quite there. And let's make this fatter, huh? All right. We said when you're on Monday, when we're here, I said you want to look left, okay, and recognize that this low is lower than that low. And using price action, a bear would drag this across, and that would be a new sell zone. But and the reason there's an X here, but I said a swing trader knows that this is the zone to sell. In fact, it's here and here. If you know how to swing trade, that's all straightforward, right? Either way, everybody knows that that's a sell zone. Price action says this is a sell zone. So you take that whole area and you make this whole area here is just a big, ginormous sell zone, right? That's what we talked about Monday, right? And the target now, we said we're probably going to have trouble in this area, but the target is here. Isn't that nice? Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 down. Now, I think an up, up, sell is going to be difficult. The reason for it is we have this area identified as plausible support. So any up, up here could be, you know, reversal up, up. So I would simply move my stop and try to let it run. Yeah, I hope so, Daniel. Yeah, I really enjoyed my experience there, and I'm glad I got out of that ugly suite at the top of the Ritz-Carlton. But the funny thing about raffles is it's 200 years old, but they sure make money on those Singapore slings. And the signs through the hotel were sort of Disneyland. Come here for the gift shop. Come here for the gift shop. Like, whoa. But I'd like to see I'd definitely stay there again, especially when the renovations are done. I think what I should do is release a tiger under the bar. Oh, wait, that's been done. Yeah, the old raffles ruled. All right. So euro, dollar, that's just where we are. So somebody earlier asked about that, about the euro dollar. So I've covered that. Oh, Alex, when do you go for a conservative weekly target instead of the full one? Oh, great question, Alejandro. Okay. So let's see if I can find an example. I guess this is a decent one. Okay. It's lower than the CPP. You can basically call it an M2. That's not a perfect M2, but it's certainly not the central pivot in play. Okay. So bull bought it here, and because it's below the central, I'm going to call it more of an M2. Then the target is M4. So it's M2 to M4, which is here. Okay? That's the range that we're looking at. Let's see if we can find a different example. Nope. Okay, well, I guess this example this week. Okay? I would call this a central pivot point, CPP. In that case, we're going to S2. Okay, because it's a more aggressively bearish because of the central pivot. So we're going for the more aggressive target, S2, not M1. Okay. Okay. So any questions about that? So again, because of the entry, the expected range is here, and because of the entry, the expected range is farther, the more aggressive target. Yeah. It's sort of like, think of it as a pivot point. Think of it like Fibonacci. If you have a small retracement versus a larger retracement, which one's going to extend more? A or B? Which one's going to have the highest high? Who will have the higher highest high? Who will have the higher high? Which one will extend further, A or B? Yeah, A. And the logic with the pivot is the same thing. This is, in this case, B, setup B is more bearish than setup A is bullish. Or Elliott wave. But I don't study Elliott wave. But yeah, Elliott does all of this nonsense too. They call him a genius, but I don't know why. I don't know why she swallowed a fly. So anyways, we tore that up, huh? Like a split hog. I split that like a hog. I said that to my wife. I'm like, damn, you split that like a hog. She's like, I don't know what that means. I'm like, no, nor do I. Just sounds good. Okay. Looks like we set up a sell zone yesterday. So this one's actually a troublesome truck. That looks like support. And this whole area here looks like resistance, right? So what I prefer is down, 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 up, sell, down, 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 right? As soon as we make the lower low, I grab this and I say somewhere around there I want to sell. And then so if it works its way up, this becomes a new sell, right? This is support, that's resistance. So you either don't trade it or you trade it like a range, right? Okay, which means your best opportunities are here or here if it breaks low than that. Okay, so it's not as good today as it was, I guess, yesterday. Jim says, isn't Elliott wave just a string of fibs? No, there's some, oh, what would I call it? There's a bit of frequency in there. I don't think that's the right word, but to my self-taught mind, that's what I called it. There's definitely Fibonacci. There's a little bit of price action. There's a few things all intertwined. Okay, so I'm not poo-pooing on it. I think you can learn it. I think the downside to it is counting waves. So what do I like to teach? I like to teach macroeconomics in the sense that the world does business with the rest of the world. And when these transactions get done, money is involved. So if you're buying $1 billion bond from Deutsche Bank and you're moving it to your Hong Kong account, all this, there's money involved. Money goes from one bank to another bank to another bank, and these banks typically are across borders. So whether you're buying oil or bonds or wheat or building a business or selling a business or whatever, just sending money back home, money crosses a border. So I like to look at it from a business person's point of view. It's a cash flow. And you can ask yourself with macroeconomics, where is the money going to flow to? And how quickly will that flow happen? And macroeconomics will tell you if the flow will speed up or slow down or even reverse. Okay? And when you have all that, then I like to use some technical analysis to analyze whether my fundamental bias is correct, whether money is flowing to a country or away from a country, and if it's doing it quickly or slowly. Okay, so I like to look at a business person point of view. What I don't prefer and what I don't teach would be, I think, more like an Elliott Wave person would say, oh, well, this, you have to change this count and then this here, and then this should be a 3 expansion wave, and this should be so much more percentage larger than this one, and if that happens then it should slow down, and you're counting it and you're treating it. To me, it's like a video game. I know an Elliott Wave person would just die when they hear me say that. I don't mean it with disrespect. I'm just saying they're so busy counting these waves that they lose sight that it's simply, dad sending money home to his family, or Nike investing into new sweatshops in Vietnam. It's just money flowing for business. So I like to look at it from a business point of view because I'm a businessman. Right? I'm not a businessman. I'm a businessman. I don't want to count waves. To me, it's like doing Sudoku. It's not even interesting. Right? You're like, oh, well, this next thing has to do this, and therefore I'm going to, no. Doesn't fit my personality. Hoodoo! Thank you, Hoodoo. Welcome to the family. A true Elliott Waver trades the 5 wave, is that right? Amazing. So I bet you, though, a lot of what I do, an Elliott Wave technician would agree with me. I mean, what do we cover on Monday? Yeah, sell here. Oh, look, it fell. Yeah. Right? Yeah. Okay. And he might say, or she might say, oh, well, I don't know what this is. Some sort of wave. I don't know. This might be your 3-wave correction. And then something else. I don't know. Whatever. Right? So they're saying what? This is an ABC, and this is a 1, 2. I don't know. I don't know what the hell they would say. But there you go. Sir, do you use Fibbo extension? Yes. With Cypher, I have no idea what the heck a Cypher is. All right. Let's move over to the yen-yens. Yeah, like you said, Chuck, I don't know nothing about that. Okay, going back to what we said on Monday, right? This is a big buy at the market open. Remember, if you're a professional trader, you should be at your charts at the market open. For me, that's Sunday afternoon. Okay, and this is a step up of that, right? And then your second chance, which is on Tuesday, is the pullback, the higher high, higher low, right? And, you know, what's the next one? I don't know. This is sort of a bit of a consolidation. Okay. What did we talk about? I think I asked you if this was Hazam! Hamza! Hamza, welcome to the family, Hamza. Whoop, whoop. Hamza. I think we were talking about where are we going to be at the end of the month. Was it this one? No, that was a different pair, wasn't it? Well, still, I always ask, or I always try to ask you, you know, or teach you to ask yourself, where are we going? So if someone bought this, what's their target? We know it's here. Is it central pivot point or is it M2? I'm going to call that closer to M2. So the projected range for this week on Aussie yen would be here. So if you bought it, if you bought it at the market open, your target is here. Okay, not the higher level, not the monthly pivot, so on and so forth. Okay, now you might disagree with me and it still might go higher, but that's the logic, that it's just simply going to go from M2 to M4. Okay, and then that should govern everything you do from then. Like, okay, buy that dip. Now the interesting thing is we haven't had I would say like a legitimate higher high. So I don't think I'd be adding on to this. I'd just let it float. Cool, right on. Right on, Uzar. Who's there? Okay. So I don't know, like this, I don't know if this is catchable. Maybe it is. Seems like it was the wrong time of day and all that kind of stuff. So I don't know what you'd be doing now. Maybe trying to catch this 21. But see, all of that is sort of like mediocre day trading. So, right, you want to switch this up. Okay. Using the same logic here, this doesn't look good to me, but whatever, we'll go. On a daily basis, this is going to come up and tickle 83 and stop. Okay. Again, it's CPP to R2. Okay. You see you got the Stokes kicker off the central pivot, off the moving averages. Okay. And what I've taught you over the years is all of this is better when you have a larger trade plan. So we know just for the week, okay, this was the market open, Sunday afternoon. If you're a week trader, you know that that was an easy M2. So now you know way up above us somewhere is an M4, weekly M, okay? So then you say, well, on Monday, I'm going to buy it here at the open, and you're going to take profit somewhere in here, right? Then the next day, you're still a bull, so you buy it here, right? This is an M2 again. Target's M4, which is here. You missed it by, what is that, 2 pips? Okay. Market open, this is a CPP. Target instead is R2. Okay. So on Monday, this was your trade plan. On Tuesday, this was your trade plan. And on Wednesday, this is your trade plan. And for the week, the whole trade plan incorporates all of that. You see how easy this gets if you just simply make a decision? Because your first decision was, oh, if we're at weekly M2, we're going to weekly M4. Therefore, Monday, Tuesday, Wednesday, Thursday, and Friday, until we get to this weekly M4, I'm probably a buyer. Where do I buy? This is the buy zone. Let me do it in yellow. We know from the swing trading group or a swing trading course, these are the buy zones. When I look at this chart, there is no other place to buy. Michelle? Actually, it says Michael, but then you got a female name. So Michael with a female avatar, please stop trying to post spammy stuff. So you've been blocked. All right. Does that make sense, guys? Was that helpful to anybody? Please give me a like if that was helpful or at least colorful. $100%. So if I put out a tip jar, you tip me $2? M4 Prince is a pivot point, so you need to go to fxbootcamp.com and sign up for the swing trading course. Yeah, remember that? What was it, a year ago or 2 years ago, Ron? Yeah. It'd be kind of funny though, right? Like, hey, thanks, that was good, dude. $2. Ching, $2. Right? Prince says, okay, but is it mostly pivot? It's 100% pivot. And I'm looking at weekly pivots here, not monthly. And then from that, so the weekly plan, what I'm trying to show you, Prince, is the weekly plan is simply this. Okay, on weekly pivots, which you don't see any longer. Okay. But if you have that as a plan, if you're long all week, why wouldn't you be long all day? So this is Monday's day plan if you're a bull, right? You guys know how to day trade, right? If you're a bull, easy, right? Bull, pa-chow, pa-chow, pa-chow. Bull, pa-chow, pa-chow, pa-chow. Yeah, Ian, and then I thought because we're going to start the construction on the wine cellar, which means that once it's built, probably in the early new year, I'm going to have a lot of empty shelves. Because the worst thing about a wine cellar is you have to fill it. Because you walk in, you're like, dude, this thing's empty. What do you mean empty? There's like 50 bottles in here. You're like, really? It just looks empty. So it'd be great if if 1,000 people could all chip in and fill the wine cellar. But I bought a case on the weekend, actually. I bought 16 bottles. Nothing too fancy. Chateau Saint Michel, Indian Wells. I got the cab, and I got the, there's a red wine blend from 2015. And so I drank 2 bottles over Thanksgiving, and I'm drinking 2 more bottles. That gets me down to a case of 12. And then I'm going to keep that case of 12 for at least 10 years till 2025 and drink it during the recession. Prince says, for yen pairs, Asia Open is preferred. Well, you look at that and you're like, damn, all of that moved in the Asian session. Right? So Prince is on it. Check it out. Australia is in Asia Pacific, right? In Asia. And the Japanese yen is in Asia. So maybe the Asian time zone is a good time to trade this pair. Right? Is that right, Prince? Yeah. I think I would spend, right? I think I would go with the €3 Italian wine. Yeah. Rioja is nice. Tempranillo. You know, I like Spanish Grenache. Grenache. But I'm, you know, but anyways. I think my favorite is Châteauneuf-du-Pape out of the Rhone area of France. And it's probably 70% Grenache and 30% other. So anyways, yeah, this makes a ton of sense, right? Now, I hope did anyone have like an aha moment? Like, there's a lot going on here where I'm showing you day trading. I'm showing you weekly swing trading. I'm teaching you how to look at multiple time frames and have multiple, you know, things overlapping, right? Yeah. Well, Ian says it'll taste like vinegar for €3. Well, someone else said for €1 you can get beautiful Italian wine. And that's one I'm like, well, if you like the €1 wine, I'll go with the €3 wine. But anyways. Yeah, Joe's trying to get it all together. Yeah. Yeah, faux show. So anyways, good. I'm glad you're liking it. Glad you're loving it. Okay. I used to yen, don't even want to look. Kiwi, yeah, let's go back. Well, Kiwi's going to be a lot like yen, right? Or Aussie. Let's do this one. All right. So, on Monday, we had a plan. The plan was here, which is, you noticed, M2. Therefore, the target is M4. See how we already did this? And then I said, this looks very toppish. Okay. And I believe I said I have my doubts that it's going to go higher. But if you were going to try, you were going to force it in here. But I'm pretty sure I wouldn't have liked that. And I know I would have said something like that because it's just technical analysis. None of this is my opinion, right? So, like, look. Right? You don't have to be a rocket surgeon to realize that this area is not going to go unchallenged. And by the way, I worked at NASA for 2 summers, so I am a rocket surgeon. Okay. So now, it's one of these things I'd prefer to let it break and then maybe even catch it next week. Okay, that's all. If you were shopping while you're hungry, you know, like, I don't know. Yeah, I don't think I would trade this if I were me. Thank you, Thomas. Thomas, if you go to the FX Bootcamp YouTube channel, which I have not updated in years, but it's still there, there are 2 training courses up there for free that would explain a lot of this. Let's see if I can find it for you guys. Hang on. So let me go to YouTube first. I think it's just youtube.com/FXBootcamp. Let's see. It might have to be CFXBootcamp/FXBootcamp. Let's see. I think it's working. Yeah. So you go to youtube.com/FXBootcamp. Okay. And playlist, I believe. Playlist.
U.S. markets is driving some investors to foreign.
And this one here is a great place to start. There's 4 videos.
Hey, good day, everyone.
This one has 200,000 views.
Make yourself comfortable. This is a presentation for the Daily FX audience entitled How to Improve the Timing of Your Trades. And to do so, we are going to use moving averages. Now, this presentation is going to be part PowerPoint, but also
and then you go to part. So that's moving averages. And so it's going to explain the setup. And then it's going to go through this other one.
Hey everyone, welcome to the presentation for the Daily FX audience entitled How to Improve the Timing of Your Trades Using Oscillators. Now this... So
anyways, yeah, so go through if you want, and that'll give you a good idea of the setups and all that kind of stuff. Okay. Hey, thank you, David. Welcome to the family. Yeah, I don't know when that, how old was that video? Was it 9 years old? Something like that? And you'll just be shocked. You'll look at my charts and you're like, damn, they look like the same charts. Yeah. I've changed very little. My trading has changed very little in 15 years. What does that tell you? I got an email from a trading guru that I actually know, but I guess I'm on his list or something. I got one, and he's offering a new trading strategy. I never understood that logic. Isn't like a new trading strategy like the worst thing in the whole entire world? Why would you want a new trading strategy? Doesn't make sense to me. It's weird. So I teach you the way I've been trading for 15 years. Right? Like, I don't want anything new. Why would you want something new? Why? Your old stuff doesn't work? Well, then how do I know your new stuff's going to work? It might work for a while, and then market conditions change. So this is why, by the way, this is why you need a multi-year track record of success. The reason for it is whatever you're doing now might fit the market now. So some guy comes up with a new trading strategy, and it works really good for 6 months or a year. Right? Why? Well, you finally realize what market conditions you're in, and then you start trading that, and maybe you're just counting waves all day. I don't know. But it's working now. And then the market conditions change. So we talked about real interest rates being, basically zero in the United States, and that the Fed's not that close to pausing. Maybe in a year or something, we'll get closer to 1% real interest rates, and maybe that's enough for a pause. I don't know. But at some point, the central banking policy in the United States will change, and we're about to learn that today. And then we got this whole Brexit thing coming up, so that could change. So something along the way in the future is going to change everything. And so whatever you're doing right now will probably be a losing strategy sometime in the future. And someone that comes up with new strategies, what happens is they fail for a period, then they adjust and come up with a new strategy, and that works, but it might take a long time to get to that point. And then that works for a while, and then the market conditions change again, and then they fail again and give it all back, and then you're constantly adjusting, right? And what you want is to be able to adjust with changing market conditions. And that's why there isn't like a new strategy. Okay. So anyways, do we miss anything? Pound yen? Okay, pound yen. You like it a beast? What's the target? Okay. Yeah, what's the target? We know it, right? M2. Target's M4. So that's what we're doing for the rest of the week. Oh, done. It took a long time, right? By the way, if any of you guys are like part-time traders, which means you have day jobs and you don't want to stare at your charts all day, every day, you need to become a swing trader. You need to complete the swing trading course, and then you should join the swing trading group so we can cover things like this, so you can be in this trade. And you can do things like, I trade pound yen, there it is. We'll do this on a Friday. And you'll say, oh, my trade plan for next week is buy here, and this is the target. And you're done. So somewhere between Friday and Monday, you're long, and you already know your target. And, you know, you'll spend an hour early in the week, or either Friday or Monday. You'll spend an hour or less. And then over the course of a few days, maybe 5 or 10 minutes every day, you can check in on things. Okay. M2. No, M2. Dude, all right, print something. You need to take the course. Take the course. You don't get it, you need to take the course. There's no other ways of saying it. That's an M2. And you're like, M2, what's an, is that? No, dude, you need to take the course. You don't know, so you need to know, yo. All right, so we have that in mind. Boom, done. Great, so what if we were day traders? Okay. Well, you would buy here, and guess what? That's the target for the day. Okay. Here, you're a bull. Oh, wah, wah, wah. That one didn't work out. It's up to you whether you lost money or broke even on this. But that's your buy zone. So that failed. That's really too bad. And then this morning, boom, there's your buy zone, and here's your target. Okay. And like check things out. Like, would you call this, this is sort of in the middle. Would you call this a central pivot point, or would you call this an M2? Well, I'd call it an M2 because really it's set up on Friday, and that's why I do the swing trading group on Friday afternoons, because we're front running, so you could actually be in before the Sunday open. Okay. But anyways, based on the M2, the projected top for the day, this is just daily pivots now, is here. Isn't that awesome? I would call this an M2. And therefore the target is 145.73. It's that specific. Yep, GDP 3.5. Woohoo! Yeah, Lady Cash, some people say just refresh your YouTube. No indicator will help you. Now, that's just, it's a fallacious statement right off the bat to say nothing ever. Who's there? But anyways, no indicator will help you. Well, first of all, you're contradicting yourself because then you say 200 and 100 SMA. Okay. Now, the 100 and the 200 SMA is typically used by stock traders, not Forex. That's interesting. But you go ahead and you can use those. But I don't, I mean, here's the 200 EMA, right? Is it really that helpful? Like, is it really that helpful? I look at this and say, well, this pound yen is moving sideways. I mean, that's all of that. Do I disagree with you? No, indicators are necessary. Well, I will disagree with you. What you need, in my opinion, is this. Pivot points, price action. And everything else is, right? Okay. And then everything else is helpful if you know how to use it. And here's the thing, is there a lot of people that say these things that you just said have no clue on actually how to use the indicators. So, but I don't disagree with you, except I don't need the 200 and 100 SMAs. Like, what are they going to tell you that you can't see just by looking at it, right? I can't imagine they're actually that helpful. So I would disagree on that point. Having a leading indicator like pivot points is incredibly helpful. All right. So like on the first day of the month, we're here and I say to you, boom, we have targets all set. I mean, I don't know. So I'm going to definitely disagree with you, right? Mahmoud, I don't put you into trades. I teach you how to set your trades up. Now, if you didn't get any of these trades we talked about in great detail on Monday, where I'm like here and here, plan A and plan B and this and that and that, if you can't trade that, then keep coming to the webinars and I'm going to teach you how to do it. But if you want me to make trading decisions for you, you have to pay me money. All right. So anyways, I think that's actually it. Why don't we call that a day? Yeah, it seems late enough. I was just checking the time. So, Mahmoud, my apologies if you were expecting me to put you into trades. Didn't mean to deceive you. I'm only teaching. So anyways, thank you very much for coming to the webinar today and coming to the webinar every day. I hope you are learning. I hope you're getting a better understanding of technical analysis and fundamental analysis. But you see, like, the way I'm trying to teach you to put together trade plans, there's a lot of sort of psychology behind it. And I hope you realize that when you're putting your trade plans together in advance, it's a way to control the stress in your life. Mahmoud, I've been doing webinars for 15 years. People have seen me in over 100 trades. I used to do $1 billion a month. I have my own dealing desk at a brokerage firm. So, whatever, bro. But if I'm somehow not adding value for free to your trading, whatever. But I hope I am, and I think I am. But remember, it's not about me. So I'm not trying to pitch you that I'm the world's greatest trader. I'm not trying to pitch you really anything. I'm just trying to help, man. I feel like I'm helping, so I hope I'm helping. So anyways, Mahmoud, hopefully I'll see you tomorrow. Yeah. Cool. Don't forget the likes and the subs and stuff like that. Yeah, I am, Murray. Thank you for making me feel better. I feel a bit better. Yeah, I was feeling pretty run down, but I feel better. I do. I really do. So thank you guys. I appreciate that. Before going, tell us which most indicator, the one I just showed you. Price action, which is not an indicator at all, and pivot points. I guess it's this one on the pound yen. These are the most important things, leading indicators. Moving averages are lagging indicators. Oscillators are lagging indicators, that kind of stuff. Price action is a leading indicator because it's a methodology setting things up for the future. And pivot points are also leading indicators. I know the top of the week on Sunday, and I know the top of the month on the first day of the month, right? Yep. Yeah, good, Mahmoud. Right on. That's what it's all about, brother. So namaste. Peace on earth. May the pips be with you. May your profits be above average. Let's say that again. Peace on earth. May the pips be with you. May your profits be above average. Thank you for being on my team. Thank you for being a client of Traders Way. And if you are new, maybe would you please visit tradersway.com and open a trading account. Where do you get those pivots? What pivots are those? In the video description below on the YouTube channel, there's a link to download all my indicators, all my chart templates, all my profiles, right? All of this stuff, monthly, all the pivot points in there, everything you see here, and all of these things are all available in the download link for free. What? Yeah, for free. In the download link where it says download my chart template setup, click here. Compliments of the firm. Yeah, Chuck, I don't like it actually, Chuck. So I don't know. Order flow, is that right? Yeah, I don't trade. No, sorry, Jim. I'm so sorry. Sorry, I'm so sorry. Right? I hope not, Stefan. Hope not. Anyways, take care, guys.